looking at the ES E-mini futures 2000 tick chart, and we're using price action rules and market geometry to determine where to enter for high probability setups. We're starting off this morning in what seems to be a trading range. You can see push phase down, push up, push down. We did fail to meet the bottom of this trading range. You can see we pushed back above EMA now, so there's definitely some bullish imbalance. But so far there's no real clear structure other than this trading range, and it's not that healthy of one. You can see a lot of empty room here. We pushed up, bounced off the bottom of this trading range, and then broke back below EMA and then went higher. And then we're just consolidating right here in the middle, right here at this midline. It helps too, you can always draw these and see, where a price is rejected from the midline of this channel or this trading range. So area of development, really just kind of sitting on my hands. It's a Friday. The market can be pretty choppy on Fridays, so I'm just going to sit here and wait for some clear market structure. Not even looking for trades. You got to be patient in times like this. All right, guys, we have this nice confirmed downtrend working lower, but we have this short-term uptrend that just broke outside of this channel. So we're expecting this channel to create a new extreme. A new extreme is basically just a lower low than the lowest low inside the channel while it was still in play before it broke outside of this channel. You know it's a break outside of the channel when you get a bar that closes outside of the channel. This is pretty common with a really strong short-term trend like this. So once this channel gets break, push to new extreme. So I want this channel to break, get a new high. Then I can start to look for shorts below EMA using the EMA as a key entry point to be able to enter a short trade to test new low of this downtrend. So we've pushed so far up. We've retraced so much of this downtrend. You can see way over 60%. So this is the 50% line. So 60% would be around here. After about 60% retracement, I no longer look for new low for the trend. So I'm just going to be playing this little short-term uptrend now and expecting some kind of second entry long at the EMA to test new extreme once this one breaks. All right, guys, coming back as I entered this trade. Now, we got a bear bar with a break above it, but you can see this strong bull bar that formed right after. So it's kind of like a really deep limit order with a double bar entry. This uptrend needs new high. It's a little bit wider, something like this. So we need to create new extreme for this uptrend. Nice rejection off of the EMA. I'm fairly confident in this trade. Let's see what happens. All right, guys, we got the scalp, the initial 8-tick scalp. And I really like this trade now because it formed this really nice bull bar rejection off of EMA. It's like a higher low confirming the setup I entered on. So I'm going to it automatically moves my stop loss to break even. And anything here, like if we reach this 16, that's just an extra, small scalp. And then I have this other contract up here that I managed as a runner. Just in case like the market makes a crazy long spike and I can, capitalize on it. Just to keep one contract in to catch something crazy if it does happen. But hopefully we reach the 16. Let's see what happens. Okay, so the fact that we rejected off of the EMA after new extreme is a really good sign that there might be a secondary channel, something, let's see. So something maybe, I don't know, something like this possibly, some kind of spike in channel along these lines. You can see strong rejection off of the EMA. It kind of lines up kind of one more rejection off of this bottom trend line would confirm this. But the fact that we created new high for this spike and then reject off EMA and then continue to work higher, there's got to be some kind of channel. I want to see a break above these highs though to really trust the second channel. All right, guys, our runner got stopped one tick below this bar. That channel wasn't confirmed. You can see new high after new extreme. We expect correction or reversal. And it looks like we might have some kind of correction here. Something like this. Looks like a small trading range. I bet we find support here, and just continue in this sideways action. Really good trade though. It was definitely a little bit more risky just because we didn't get a good signal bar. But the context was so strong. This uptrend, you can see how strong it is, how far away we are from EMA the whole time. Broke outside of that channel, got a second entry long. Saw a lot of bullish pressure right here. So I got a good limit in on this bar. I entered at the bottom of this bar here. So pretty good trade. I'm going to go back to waiting though. I think I'm going to take my break now. Come back and see what the market's done. Alright guys, came back from my break. It looks like we did consolidate sideways. We are breaking outside of this trading range right here. And I'm thinking we're going to pull back in because most of the time breakouts fail of trading ranges. So if we continue to work higher, then there has to be some kind of wider channel. Because when you break out of a trading range like this and it continues higher, not only that, but we traded up. So if it does end up working, there's a good chance that there's something wider that we need to start looking for. But that's all speculation, so we'll see what happens. Alright guys, I'm going to go ahead and wrap up my trading day here. Overall, pretty good market structure, pretty good price action. Started the day off with this nice trading range right here. You can see though, something you want to keep your eye on when you're in a trading range like this, a lot of empty room at the top here. So that shows that there's bearish imbalance and there needs to be accountability for that, right? So when you're looking at this trading range and you see that it broke out of the bottom of the trading range and most breakouts fail, this one did fail. It pulled back into this range with this nice uptrend working higher, but we had overshoot of that channel just like we did here. When we get to this point, I'll talk about overshoot and what you can expect with that. But we ended up breaking out of the trading range again and continued to work lower, plus all this empty room. Knowing that most breakouts fail, like this one did here, we broke out of this range and it pulled all the way back to these highs. So we continue to work lower, so I drew this wider channel. I didn't have this one drawn originally. I had something like this from this swing down. But there was no overshoot and no break other than here, and we never created new low. So we have to account for that price movement somehow. So I do think it was this channel. It doesn't fit quite as well, but with overshoot, when overshoot happens, it can lead to a complete market reversal like it did here. You never want to take the first, second entry short, even though quote unquote this channel needs new low, right? Like this one, break, push to new extreme. This channel up, break, push to new high. This channel needs new low, but you don't want to take the first, second entry short directly after because it can lead to reversal like it did here. That's just how you can play it safe. An overshoot of a channel is basically like this downtrend. Overshoot is when it breaks out of this side of it because it's overbought or oversold. Now, if it would have happened on this one, it would break out of the top because it's overbought. So when overshoot happens, just be wary. You definitely want to see like this uptrend break, push to new high, and then like a strong reversal below EMA to prove that we're going to test new low. You don't want to just take the first thing that happens after overshoot. So after we created a new high of this uptrend, we continued to work higher, you can see. So we have to account for that as well by drawing this wider uptrend. I only took one trade today. It's this one here. Now, on this chart, it's a double bar entry. This bear bar is the one that got the break. So you can see first entry long, pull back, second entry long. We count every time a bar gets a break above its high as an entry. and a pullback after it breaks below a bar, right? So you have new high, first entry long because it broke above this bull bar, pullback because it broke below this bear bar, and then second entry long when it broke above this bull bar. Now the reason I entered this trade is because on the second chart, which is basically the same thing, it just has different bars, you can see it's not quite a second entry long on this chart. There's no break above any of these bars highs, you can see. So it's a first entry long, but you can see such a strong bullish rejection. We broke below EMA a little bit and then just ended up completely filling that entire movement of the last bar. This uptrend needs new high, pretty decent. So the second chart is all it is just the same chart, but break at end of day is checked instead of unchecked. That's all it is. And it shows the same price action. Bias can conflict a little bit, but for the majority of the time it's the same thing. The only thing different is that it gives you different bars to be able to enter on and stuff like that. So if you have a strong bias like this, you can see how strong this is. Break, it needs a new high. The bias is strong enough to find pretty much any long you can off of the EMA, especially when it's a second entry long that just has a bad bar. But pretty good. I scalped 8 ticks. I think 13, and then I caught like 4 more ticks or something with my runner. So overall, pretty good trade. And pretty good day. So thank you guys for watching. If you have any questions, feel free to leave them in the comments. Feel free to subscribe. I'm going to be uploading every day, every weekday, my live charting session. Thank you guys for watching. Good luck with your trading.